with investment portfolios falling around the globe due to tariffs being announced by the United Kingdom, China and other global world powers, I figured it's time to set the topic straight and talk about how global tariffs and gold bullion as an investment correlate between the two. Hello everyone and welcome back to another episode here on Future Investments. Today we're diving into two important topics that shape the global economy: global tariffs and gold bullion. While these two concepts might seem quite distant between each other at first, they're deeply interconnected in the world of international trade, finance and even investment. Understanding the relationship between tariffs and gold bullion can give us a valuable insight into how economies function and how investors navigate uncertainty. So what are global tariffs? Well, essentially, a tariff is a tax imposed on imported goods and services. When one country imports goods from another country, it often has to pay a tariff, which is a percentage of the value of those goods. Now, tariffs are a way for governments to protect domestic industries by making foreign products more expensive and less competitive in the local market. Now, there are two primary types of tariffs. Firstly, you have ad tariffs. Now, an ad tariff, this is something that is based off of the value of goods being imported. Now, for instance, a 10% tariff on cars means that if a car was worth $20,000 when it's imported, the tariff would be $2,000. And you also have specific tariffs. Now, these are less common, but as an example, these are fixed fees levied on specific goods. For example, $5 per ton of steel imported, regardless of the price of steel. Now, tariffs can be implemented for various reasons: protecting local industries, raising government revenue, or even as a tool in diplomatic negotiations. The decision to impose tariffs has a wide-reaching implication, of course. It can increase the cost of goods for consumers, shift trade patterns, and impact global supply chains. Of course, we're seeing this right now. Now, global tariffs and their impact on the economy. We're seeing a huge impact of this right now because of Donald Trump's global effect and change on tariffs around the world, and we're seeing repercussions of that from countries like Canada and China. Now, when the tariffs like these are implemented, the immediate impact is usually a rise in cost of imported goods. For example, if a country imposes a 25% tariff on steel imports, it could make steel more expensive for manufacturers who rely on this to make their products. This can increase production costs, which could in turn raise prices for consumers, and of course it affects things like pay rises for the workers themselves. However, tariffs have a more far-reaching effect than just price hikes. They can lead to trade wars, which is exactly what we're seeing now. And this is essentially where countries retaliate by imposing their own tariffs on goods from the country that initially set the tariffs. So case in point would be right now a lot of this standing towards America. A perfect example would be the United States and China, where both countries are imposing tariffs on billions of dollars worth of goods. One of the significant impacts of tariffs is market volatility. This uncertainty can cause shifts in currency values, commodity prices, and even investor behaviour, which brings us to a critical point: gold. Now, the role of gold bullion in the economy. Well, gold bullion, simply put, is gold in its purest form, typically in bars or coins used as an investment or a store of value. For centuries, gold has been seen as a safe haven asset. When markets are volatile or uncertain, investors often turn to gold to protect their wealth because it tends to hold its value over time, unlike stocks, bonds, or currencies, which can fluctuate dramatically. So why does gold become a go-to investment when the tariffs and trade tensions rise? Well, for me, the connection is rooted in the concept of the economic instability. And I've spoken about it on the channel many times before. When there's economic instability in the market, people flock to gold as that protection for their portfolio. Now, when tariffs increase, it can signal specifically growing trade tensions, or even the possibility of the big R word, the recession. Investors in response may move their assets from more volatile investments like stocks into gold, which is perceived as much more stable. So how do these tariffs going on in the world right now affect our gold prices? Well, the relationship between tariffs and gold prices is rooted in the broader economic environment. When tariffs are introduced, particularly on key industries like steel, technology, or agriculture, the consequences can be far-reaching, leading to inflationary pressure and potentially slowing down economic growth. Now, here's how some tariffs can influence the price of gold. I've jotted this down sort of in a bullet point example for you. You've got inflation. Tariffs can lead to higher food prices, resulting in inflation, and when inflation rises, the value of paper currencies tends to fall, and investors often turn to gold to preserve their purchasing power. Now let's look at a real-world example, the US-China trade war. Now this actually began in 2018, but really it's been ramped up in 2025, where Donald Trump has come to power on his second term as President of the United States. Now both countries imposed heavy tariffs on each other's goods, leading to a heightened market uncertainty. During the current period, we've seen a significant price rise in gold. In 2018, as trade conflict did start and started to escalate, gold prices surged by over 10%, and investors rushed to purchase gold as a hedge and to preserve their wealth. I mean, it's the best wealth preservation device there is. And this phenomenon is not limited to just the US or China. We see it here in the UK as well. When large economies engage in tariff battles, it tends to increase global uncertainty, pushing investors back towards the precious metal that is gold bullion. It's a pattern that has been observed time and time again during periods of geopolitical and economic tension. And once again, we're seeing that same result happen. Now, in conclusion, to wrap up, global tariffs and gold bullion are interconnected in a delicate balance of market dynamics. While tariffs can disrupt trade and portfolios, increase costs, and create economic instability, gold bullion provides that safe haven for investors looking to protect their wealth during these uncertain times. As tariffs continue to be a tool in this global trade negotiation going on right now in the world, keeping an eye on how they affect the markets and commodities like gold will be essential for anyone involved in international finance or investing. So overall, there's definitely a correlation between gold and global tariffs, especially with the way it's affecting, fiat currencies. Thank you for listening. I hope you've enjoyed this episode today. It's been a really fun one that I've enjoyed talking about, something a little bit different. Let me know in the comment section if you've enjoyed this one and you'd like to see more dynamic and factual content like this. If you did enjoy it and stayed all the way till the end, I'd really appreciate it if you could click that like button and subscribe. It really helps the channel grow, and it also gets this content out to more people who want to see it in the relative circle. Until next time, I'll see you all in the very next episode. Thank you for watching. Bye-bye.